If the house doesn't appraise, my buyer can still cancel the deal. They can cancel it based upon the loan contingency, right? Sure they can.
This is Las Vegas Real Estate Now with local real estate expert Harvey Blankfeld.
John, I wanted to get into the idea of what buyers are having to do. We started talking about that last segment. Some of the things buyers are having to do, and they still have to do a lot of these things, maybe not to the degree they did 2 months ago, but now they still have to do a lot of these things.
Yeah.
So when they're out there and they're offering maybe a shorter contingency period or things of that nature.
Well, I mean, the whole concept here is buyers are in a position where they need to use every ounce of leverage they have to try to make their offer competitive to win against the 20 offers on that particular house, right? What I'm seeing now is buyers are compromising or providing flexibilities that did not exist in a more balanced market. They're doing things like they're touching on appraisal issues, whether it be, as you said, waiving appraisal entirely, or agreeing to pay a certain amount of dollars above the appraisal should the appraisal not support the sales price, right? Let's start with the one you mentioned, which was just waiving the appraisal contingency. What does that really mean to the consumer? Now, for my world, I can't give you the loan if I don't have an appraisal, and I don't know that, based upon the value of that collateral, everything is doing. So you as an agent are having a buyer and you're potentially saying, hey, we're going to waive the appraisal. And what you're really doing there is saying, we're not going to use the value of the property as a reason to cancel the contract, right?
Correct.
Any other big part of that you think is worth highlighting? That's all it's doing.
No, I mean, but ultimately, I'm going to present them the risk involved in that as well, because now they got to come out of pocket with cash for the difference between what you're telling them the value is, their down payment, and the amount you're willing to loan them. They're going to come up that cash difference should it not appraise.
Sure, and all these factors are these things that we're potentially going to talk about. They're all about the risk or protection of the earnest money deposit of the buyer. Right?
Indeed.
They're putting deposit money down. The contract that we have in this market is basically saying the penalty limited in this transaction is that earnest money. That's all we can go after if they don't perform, right? Okay. So that's all we're really doing there. If the house doesn't appraise, my buyer can still cancel the deal. They can cancel it based upon the loan contingency, right? Sure they can.
Of course.
Because if I can't make them the loan because the house wasn't worth it, they can't get the loan. That's the finance contingency. They're out. They get their earnest money
Indeed.
back.
So what I'm explaining to my seller is that very thing. When the appraisal doesn't come in, and I know that there's 6 more days before the financing contingency is up, we're talking about that.
Like in those cases, are you asking them to prove that they have the ability to pay that $20,000 above the appraised value?
I'm doing that. Certainly, as a listing agent, I want to do that. Yes, absolutely. And honestly, as a buyer's agent too, I want to make sure they don't have to prove it to me, but I'm going to ask them, hey, you've got that money somewhere, right? Just in case. You've been listening to Las Vegas Real Estate Now. If you ever have a question about real estate or any of the other topics we cover, just call me off air or text me at 702-203-1165. You can also check us out on the web at lvrealestateradio.com or on our handle on social media at LV Real Estate Radio. We'll meet you on the radio next Saturday at 11 a.m. right here on the new 101.5 FM, 720 AM KDWN, the Talk of Las Vegas.